This is Market Day Report. Glad you're with us. Markets are up and trading. We've been trading now for 13 minutes. What's happening? Let's go to the corn market first. You know, we were lower yesterday, the exception the December new crop, which went higher. So technically, December corn has been higher for 2 straight sessions. Well, it's up 2 1/4 right now at 462. And why are we seeing this little rally in the corn market, if you will? 430, now 430 1/4 on the old crop March. It's up 2 3/4 cents. And I say a rally, it's still just in a 3 1/4 cent trade range. Maybe it has something to do with what's happening here. Look at beans taking off. March at 1139 1/4. It's up 15 1/4. Every contract, with the exception of the September there, with double-digit gains. What about the rest of that complex? This is soy meal moving higher for the 3rd straight session, and bean oil contracts, and we're in 58-cent territory now for both May and July. Here's the wheat market, and new crop July 557. It's 2 1/2 higher, and for hard red, that same July contract, 567 1/2. It's up 3 1/4. Could we have a little battle of acreage going on here? Well, even cotton moving higher, up 20 points on the December at 68.40. I don't think that, though, is buying any acres. Brady Huck is with EmpowerAg, and is that what's happening right now? Maybe the market just trying to jockey a little bit?
Yeah, certainly so, jockeying around a little bit. I wish cotton would be buying some acres, though, Tony. Cotton growers need some love down there. So good. We'd love to see the 70-cent cotton price back on the board. But beans continue to be the shining star this week on the board, up 20 cents, I think, versus last week. And you look at the last 2 weeks, and we're up about 70 cents. So beans continue to be the bright light and the leader. Wheat chart's making a run at the 200-day moving average. That's been a little bit sticky for Kansas City wheat. You look at the 200-day moving average. So maybe we can get there, and maybe we can blow through that. So corn's just kind of there, though. But it's good to see us, 3 cents higher today. Feels kind of like a big tame corn when we got a 3-cent bid. But so far, just an inside trading week on the corn chart, stuck kind of in that 425 to 435 price range. Like to see March corn blow through 435 if we're going to create some more excitement. So couple things this morning, though. We had a daily export flash. Soybeans to Egypt, 108,000 metric tons. So that's good to see, especially considering the WASD verbiage that they put in there about China purchases possibly just simply replacing non-China destinations. So good to see non-China buyers in the bean market still. Also had the weekly export sales. Corn had a great week. Beans, another marketing year low. So you look at the price action, and then you go look at weekly export sales, and they don't always add up. But good to see beans running higher here.
Now, we are nearing that point where the decisions really have to be made, especially in your area. Your options are, you don't have as many options maybe for growers there in southwestern Kansas as we might have in the Midwest. Where are they leaning right now?
It certainly feels like corn is from a production standpoint, I think growers are really excited about planting corn. Beans, we need that price rally to come in and buy some acres. I feel like the top end on production of beans had really great yields out here with beans last year. But yeah, you get to that point in time where those decisions are being made and you start fertilizing the ground. If you go make these commitments for buying inputs and prepping the farm fields for that crop, and that decision starts to get set in stone. So beans got some work to do if they want to buy some acres here as we get closer to that planting decision. Going forward, though, South America weather, I mean, that's the key driver here on one of these markets, Tony, is what's happening with that crop in South America, the bean crop, and then the safrinha corn crop going in.
Yeah, it's not as easy as just playing offense. You've got to play a little defense as well. We'll take a break, come back in a moment. We'll talk about livestock markets next on Market Day Report. Let's talk cattle for a moment. We'll start with the live cattle market. We are higher on the front month there. Up a couple of dimes at 242.55. That's a fairly tight trade range. I'm sure we're waiting to see what happens with cash trade this week. April, however, down 15 at 240.82. Deferred contracts higher. And for feeders, we're pretty much higher here, the exception that front month March easing just a bit, but April at 365.20, it's up 60. And what about hogs? Can they break that 3-day losing streak? It's not looking real good right now, even though we're seeing strength in that June and July contract as we're holding the triple digits. We just keep slipping further and further away from $100 on the May. We're down to 96.85 now. That's down 117. Brady Huck is with EmpowerAg Trading. What are your thoughts here?
Well, that hog market, I'm not much of a hog guy, Tony, but I look at that price action and I have a little fear that could be some spillover selling that bleeds into other commodities out there whenever you have that type of a cliff type sell-off where we have some longs bailing out of that market on the hog market. Not good to see. But on the cattle side, inside trading week thus far for cattle markets, nice day yesterday. Looks like we're trying to do a little continuation today. If we can fight off the hog bears there. February fats, they're looking to test last week's high on strong cash news. We hope that we'll see strong cash again this week. I think that's what it comes down to in this cattle market is watching the cash, both what's happening out there in auctions with the feeder cattle and what's happening on the fat cattle side of things. So last week's strong cash bid on the fat certainly emboldened yards to kind of maybe wait for higher this week and hope for higher, but we'll see what comes to fruition here tomorrow probably. Box beef remains seasonally very strong, holding in the upper 360s. We have light slaughter that's really supporting these box values counter seasonally, and to anticipate that slaughter, light slaughter, continues going forward. So a lot of headlines out there, Tony, and fear of headlines can create an emotional market environment. Nice recovery after the October sell-off. I wonder, are producers getting bowled up here or are they getting buttoned up on their coverage? And I think this isn't a bad spot to come in and tighten things up, manage some risk, position to benefit from a higher market, but protect ourselves from that unexpected long liquidation event that could happen at any point in time, really.
Okay, I'm going to throw one at you real quick, and it's back to the west of you in Greeley, where it appears as though we're nearing a strike there at that JBS plant. That could have some big-time implications for the entire market, could it not?
Certainly going to shuffle around where these cattle need to go, and packers might feel like they get a little leverage with buying if you're going to shutter plants' doors and potentially kill less going forward. So something you got to monitor and watch, and going to shuffle some of that regional basis shifts that we can see out there when that happens.
Yeah, we'll keep an eye on that one for sure. All right, Brady Huck, EmpowerAg. He's in well, not quite the Wild West, but he's in Dodge City.
Perfect. But a lot of our farmers are actually in Kentucky this week.